Where are you in terms of your views on how sustained this slowdown is now in the Chinese economy and whether or not enough has been done on the policy side to support the slowdown?
Well, the momentum of slowdown we have seen since probably beginning of last year, has moderated, but has not been halted, much less reversed. I think, obviously the government has responded to the situation with a battery of policy measures, and that will take time for those measures, whether it's fiscal or monetary, to take effect. So at this particular point, I'm not too concerned about China moving to a deflationary track.
What are the data points that you particularly focus on that will give you some sense of alarm? What are the red flags that you're looking for?
Well, and I would probably pay closest attention to consumer, anything related to consumer spending, consumer sentiments. There's China now. There's obviously trade is still important, but the domestic demand has really replaced trade as the single most important engine, and the Chinese middle class have really emerged to become the most powerful driver for economic growth. So as long as consumer sentiments remain reasonably positive and the people are still willing to spend, then Chinese economy will be supported from below.
Well, what is your sense of the health of the Chinese consumer? Because we've seen, for example, auto sales, of course, falling quite dramatically, the likes of Alibaba warning about a squeeze on their earnings as well as a result of slowing consumption. But of course, we have had those measures like cuts to personal income taxes. Is the consumer starting to rebound in China?
Well, I think across the board, the sentiments have improved, since we really spoke last time. In between, last couple of months, three things have changed. One, the official rhetoric towards private sector, private entrepreneurs specifically, has turned more positive, more reassuring, and more supportive. So I think that's significant. I think instead of living in fear and uncertainty day in, day out, entrepreneurs now can afford to look forward, whether they want to embark on another investment project or not.
So you think it's more than just rhetoric, this focus on supporting the private sector? Because some skeptics would say, look, the long-term game plan is still the state sector comes first.
That skepticism has not entirely dissipated, but again, over the last few months, people have become more comfortable. Like there's not going to be a drastic U-turn, turning the clock back. Instead, China will continue to embrace private sector and embrace market economy. Okay, so that's kind of the comfort people are taking right now. Obviously, still take time for that comfort to be sustained. The second big change is really, we would mention the monetarism. Much of the slowdown, we have seen, is triggered by the draconian deleveraging policies. So now the central bank and the financial regulatory authorities have tried to ease, substantially those draconian deleveraging measures. If anything, they're trying to reflate, re-leverage the economy.
And are you seeing any evidence that the PBOC's measures and others to support the private sector are working? Are the private sector, are small and medium-sized enterprises getting the credit now that they need?
Well, definitely at the margin, those measures appear to already start to have some effect. How big effect, that again require time to ascertain. So on top of the monetarism, there's also a tax cut on personal income tax on small businesses, and that's also very welcome relief because Chinese tax burden is very high by international standards. And the last but not least, the U.S.-China trade standoff is not resolved yet, but it looks there's some positive momentum from both sides that somehow and sometime, and probably sooner rather than later, that will be resolved. So these reasons combined together, I do think that have made a difference to consumer confidence, to investor and the business sentiments.
We're just to let our viewers know, we're just taking live pictures now of Zhou Xiaochuan, the former PBOC governor, of course, who's on a panel with our colleague Steve Engel. To what extent do you think the PBOC and the Finance Ministry have been able to coordinate a greater opening of the capital markets? We've seen the Shanghai Science and Tech Board plans, for example, the bond connects or the inclusion of Chinese bonds on, for example, the Bloomberg index. To what extent is that going to be a catalyst? How significant are those moves?
Well, I do think that those measures will be also very, very helpful. Central bank has been, under Zhou Xiaochuan's leadership, has been really the vanguard of reform and opening up. But for one reason or another, the pace has not been as fast as he would have liked.
He talked about that, didn't
he? Exactly. Yeah. So now, hopefully, given the combination of domestic and external factors, our leadership will, renew the political commitment to structural reforms and to further integration with the global financial system. So this opening up, we've seen opening up the insurance sector, the securities industry, fund management, and banking industry. Definitely, will create a more level playing field. So that means Chinese consumers, enterprises will have more variety of financial services to choose from, and the Chinese investors can, have better way to diversify risks and get a better return. So all can be only good in the short term and in the medium long term as well.
Should we expect additional measures to be announced by Premier Li Keqiang when he speaks here at the Boao Forum tomorrow around opening up the economy?
I would very much hope so, but I'm not so sure. I think the government has already announced a flurry of initiatives. So now the key is, as always the case, whether they will faithfully implement and how soon. Right? So that's, I think, everyone is watching, and I would say, the government appears to be very, very serious and very committed to following through all the pledges and the promises.